Good morning, it's Jonathan Barratt with the Week Ahead Report. It's Monday, 24th of January, and obviously we've got 6 days worth of trading. Australia Day in between, obviously Wednesday's Australia Day. But we've got a whole raft of data this week, which would give us a good indication as to how we're going to place ourselves, I think, for the next quarter. Durable goods in the States, we've got some PPI in Australia. So there's a lot of good data throughout the week, and also the FOMC rate decision comes out on Wednesday night. And so there's quite a lot to get our teeth into. But before we do, let's have a quick look at how the market's closed. How the market's closed on Friday, and let's just grab that up. That's the one we want. How the market's closed up on Friday, just to give us a little bit of recap. Dow had a strong night. It was up 49 points. The S&P was up 3. The Nasdaq was up, down 14.75. I think, as we can see, the economy in the US market is getting a little bit good positive expectations there as to how consumer spending is picking up. I remember the consumer is the most important person in the States. As a result of that, if that starts to move up, then that is pretty good. So, so if anything there, I think that is quite positive, and expectations in my mind suggest that we might get a little bit more recovery there. So good. Other things that are coming out. Obviously concerns which might affect Australia. It certainly affected the dollar. Australian exports, coal exports, obviously the biggest losers out of what's happening there, and or casualties, I think is the best way to put it, because that is a concern and remains a concern because there's a lot of coal that just can't get out of Australia. That in itself has forced the price of coal up. Would not be surprised to see it hit pretty much close to the records we saw last time, 2008, floods came through. And that was around 128, so keep an eye on that. That should actually be negative and positive. The market will probably view it as being negative that the companies can't get the coal out, but positive that in fact they've got good pricing, so hopefully it will be a neutral effect. Okay, let's swim right into the couple of the markets, and then we'll go try the data this week, because as I said, there is some good data out. As we always do, let's have a look at some of the major primary inputs. Crude oil, very steady to lower. Don't like this type of price action on a daily chart. Just careful if breaks her 8 out on the downside, then she will start to trade lower. 92.50 can be gated on the top, because 92.50 is a break which could see it up through that US $100. But given that where supply is at the moment, I think the risk is certainly down for the commodity. Having a look at copper. Copper 431 off its highs, obviously, and I guess if anything there, expectations of what happens in China is the key there. And let's see how that unfolds. Still concerns there and expectations that they will increase more interest rates, and that will slow things down. This type of formation here, pretty much undecided, but I guess as long as we stay below that low of 431, which is where we are now, the risk is to the downside. So I think if we do see that breakthrough, particularly 420, 425, then I think you could probably say that copper will start to continue its trend down. Dollar index, obviously, most important there, 78.12. Find a little bit of a base here, and you can certainly see that on the daily charts that we are trying to formulate that little base here, and I think that it's coming into support here as well. So I actually feel that it'll probably hold up, and probably think that if it does hold up, then it should be all right. Dollars to go higher. Looking at gold, obviously disappointed there, 1342, and obviously that's $100 down from, or just under $100 down from the record high, or a little bit more, sorry, a little bit less, sorry, because the record highs we've seen have certainly been up around that 421 area. I'll just check that, yeah, 430, 1430, so about $90. Are getting close to that lower end of the range. As you can see, we've been visiting these areas here before, we have done before. So we want that sort of thing to hold, but not expect to see a trip down to 1320. From that, I actually think I start to like it, but obviously be very close to it. The Aussie battle at 98.90, and obviously down on what's happening. Obviously with the floods, just be wary there of that break through that low there at 98, and that would could see a break of all this trend here, and that could see it down to 90 quite quickly. So keep a close eye on that one. Euro 136.09. Holding up okay. Might come into a little bit of resistance here, but as you can see, it's well in the range. Whilst it's in the range, you can play it, and dips back to 132.33 can look for. Likewise, back up through 38.140, you can sell euro. Okay, local market, most important, then we'll get into what's happening in terms of the economic calendar. 47.43 is where she went out. I think expectations are that we'll get some more local or domestic fallout in the market that might hurt it. And as you can see, we're well and truly in this big range and a tighter range here, obviously 48.30 on the top. Downside is 47. So break through that low there, I think, will be a bit of a worry. That low came in at 46.78. So just be wary of that. Got this little trend here in line as well. So that trend starts to fold, then she will go lower. Okay, on the economic calendar front, as I said, we've got quite a bit of data coming out. PPI in Australia will be quite important. It's expected to come back. There's a lot of talk now concerning interest rates and what the RBA will do. Obviously, where she's between a rock and a hard place. China continues to move on. We import inflation. That's got to slow down. Domestically, we could start to see things weaken, and it's a double whammy there because interest rates on their side would probably see it come lower. So on one side, you're pushing higher. The other side, you're expecting to come lower. So it is a bit of a push either way, and I'd certainly hate to be in the shoes of the RBA, and I think you'll probably find they will adopt a neutral bias going forward. Okay, what else have we got there? Nothing in the States, any note there. The consumer prices, obviously, on Tuesday, very important. GDP in the UK, Case-Shiller Index, and ABC Consumer Confidence. All these confidence numbers, starting particularly in the States, will lead us into where we want with the Fed Open Market Committee when they meet and see what they actually do on interest rates. And obviously, we're expecting no change there. Rates to stay 0.25%. So then we require new home sales there as well, and also we've got Bank of England meeting as well. That's Wednesday, but that's Australia Day in Australia, so we'll all be off there. Just be careful. But obviously the phones will be switched to somebody. Eurozone confidence then on Tuesday, durable goods, capital, pending home sales, all those quite important. Quite a lot of data also out of Tokyo, and that will be interesting to see whether or not the slowdown in China is affecting growth in Tokyo. And then on Friday, we've got GDP quarter-on-quarter, personal consumption, and University of Michigan confidence numbers, all expected to be slightly better. Obviously, personal consumption is a bit of a key there, and GDP there expected to be a bit stronger. Okay, that's pretty much the war report. I hope everyone has a good day and a good week, and we'll talk to you over the week. Have a great day. Bye.